I've been waiting way too long. Take my hand, I wanna show you something. Promise I've been dying to see ya. They say the grass ain't always greener. I guess what they're saying is true. In my dreams, that's where I seen her. Take my heart and take all of me, girl. Let me show you what I wanna do. I wanna spend the rest of my life with you. Are you listening, darling? Look where we started. Breaking in half, left us broken hearted. So where do we go from here? Are you listening, darling? Look where we started. Breaking in half, left us broken hearted. So where do we go from here? Where do we go from here? Yeah, where do we go from here? Are you listening, darling? Are you listening, darling? Are you listening, darling? Look where we started. Breaking in half, left us broken hearted. So where do we go from here?
Hello and welcome back, everybody, to another live stream. Of course, my name is AJ, one of the mentors here at Bit Trading, and today we are going to run through the Bitcoin technical analysis. We're going to take a look at what I'm doing in, what I'm doing in the markets, what I'm waiting for in the markets, what I'm looking for, and what we can kind of expect for Bitcoin, really. It's been a lot of patience that we've had to exercise, right? But patience does pay, okay? And at some point, we are going to come to those key levels that I'm interested in trading, right? And once we do get to those levels, we can then reevaluate the situation. Okay, are we seeing everything that we want to see? Are we seeing everything align? If that is the case, then of course we can take the trade if the trade, of course, is presenting itself to us. So we will talk about all of that good stuff today. So before we jump into it, please do smash that thumbs up button. Helps me out, helps the channel out, and I can continue to bring this content to you. And of course, if you are not subscribed already, please do subscribe, turn that bell notification on, because I am giving some valuable information away in these live streams. And for any of the regular watchers, I think I have proven that quite time and time again, right? So make sure you do come back and watch. But enough of that. Let's jump into it. Let's take a look at what is going on. I will try and keep it a little bit shorter today, of course, if there's no questions or anything, because I understand, right, that we're not really doing much. We're not really doing much difference. Okay, we're not doing anything different than yesterday, really. But I guess there are some things that we can that I can update you on and we can talk about. So let's jump into it. Let's see what's going on, and talk about it all. So. Of course, since yesterday, right, nothing really has changed. Okay, we have just been consolidating sideways up here. Okay, I understand. Yes, right. If you're a scalp trader, if you're a day trader, okay, maybe you're looking for some trades here. For me, not really looking for any trades whatsoever here. I am waiting patiently for my bigger levels. Right, there was previously a possible short trade, and I know the team on the Discord also were discussing it a little bit as well. We had, of course, a naked point of control at $63,800, it's resistance, right? It was coming in close confluence with the VWAP from all-time high. Okay, so there was confluence here. Okay, we were seeing resistance, confluence for a possible trade. And now I went into detail with it yesterday, but I won't go into detail with it now. But basically, I just wasn't interested in the level, and this is exactly what I told the team on the Discord, right? Up here, Bitcoin is testing the naked point of control at 63,775. For me, this is not a level of interest. I remain patient, looking for $65,000. Okay, so right, we're coming into resistance. There's confluence here. Okay, but it's not a level. It's not a strong level of interest for me, and this is what I try to share with the team. I try to share with you guys as well, of how to actually find these key levels and these interesting levels. And this is just of course off of my experience and my experiences in the markets of taking these trades, right, and taking statistics down on these trades as well. And statistically, right, this type of trade here is not the trade to be taking. Okay, yeah, okay, I understand it's resistance. We could see a nice pullback off of the level, right? I understand that. But statistically, right, the better trade is the higher probability trade, of course, which is, right, like I said, at $65,000. So that is what I'm ready and waiting for. Okay, I'm waiting patiently for $65,000. Now I say $65,000, but it's a bit of a zone between $65,000 and $67,000. I would say, kind of just this kind of area here. But initially, it's like from $65,000. So yeah, that's why I'm saying $65,000, right? But $65,000 is that kind of level that I'm looking for price to come to. And initially, okay, like I said, we have resistance there, so it's okay. Can we see lots of long trades opening up coming into this resistance? Can we see price then start to pull back, okay, for a possible trade entry trigger? Once we get the trade entry trigger, of course, we look for that pullback, and then of course, like I've stated in previous live streams, right, we're looking at this as possibly then higher time frame bullish structure. So we would then be looking for a long trade here to then take that up to a new higher high. Okay, exactly like we've been taking some really, really nice short trades as with the long trades. Yes, we've been taking the long trades, but we've been keeping the short trades open for longer. Why? Well, because Bitcoin has been in this very, very bearish market structure. Okay, so remember, we were shorting all of these peaks up here. Okay, and of course we longed all of these dips down here as well. Okay, absolutely amazing trades these were, and we're looking to do the exact same thing if price is going to do the exact same thing in the opposite direction, right? We're going to start to see higher time frame bullish market structure. So what are we going to do? We're going to be looking to take advantage, right, of the pullbacks by shorting, okay, and of course taking advantage of the rises, okay, by taking long trades. Okay, so this is exactly what I'm looking to do. But for this scenario to play out, right, we need to first of all see price take out $65,000 for the short trade. And then we need to show signs of strength down here. If we don't show signs of strength down here, we can come down and take out $52,500 approximately, and that will just completely wipe out that bullish higher time frame bullish structure that we're kind of looking at here, right? So there is a possibility that we don't form that. Okay, there is a possibility, and then then we go to lower prices. That is still an opportunity. But of course, right, if we start to show bullish signs here, right, there is support here. There is this, quite a few naked points of control here, right? If we come into these naked points of control, we have GP786 as well at these levels. So if we're coming into these levels of support and we're actually looking bullish, then for me, it's okay, right? We're now not looking for lower prices here. We can actually expect a rise towards the upside, exactly like this scenario right here, where we came into that naked point of control at 52,874. Okay, we had GP786 lined up with that, and then of course we had bullish absorption. Okay, we had shorter, we had the shorts being absorbed. Okay, we had absorption. So for me, right, this was a very very bullish sign. Okay, and if I was awake at this time, I would have taken this long trade, and it would have been a really, really nice long trade. Of course, I would love to have been in that long trade. Okay, so again, I'm looking for the exact same possible setup here, where we've got a daily naked point of control. We've got a GP786 level. Can we then get the icing on the cake, cherry on top type scenario, where we get the absorption? If we can get the absorption, then I'm happy to take that trade, and I'm happy to look for another higher high on Bitcoin, and of course for that bullish higher time frame bullish structure to continue to play out, right? So that's kind of what I'm waiting for. I'm still pretty vocal about the $65,000. I think that if we are going to have a bit of a shift in direction in price, which a lot of people are thinking, which puts me on the fence with it a little bit. But if we are going to have a bit of a shift in price, where we start to look a little bit more bullish, right, it would make sense to take out $65,000 and then get the pullback rather than getting the pullback from where we are now. Because if we get the pullback from where we are now, we're not technically forming higher time frame bullish structure, and it can still be, it can still be classed as bearish, and we can still look for $48,900. It's still a possibility, okay? However, if we start to form that higher time frame bullish structure, then from there, okay, we can be a little bit more confident on everybody's analogy on higher prices. Okay, that's how we can go about it. Okay, but remember, if everybody is getting extremely bullish, okay, this is kind of when I start to turn my head and I start to look the other way, right? So this is something to be aware of as well. And that's exactly why I'm looking to take the short trade from here, right? Because I understand that we are looking for lots of long trades. We're already seeing lots of long trades open up, but we're looking for long trades to continue to open as well. Why? Because everybody is actually quite bullish at this moment in time, especially as the Fed has been beginning to pivot, right? So it's it's for me where I'm at right now is like, okay, we've got lots of long trades that have opened up on this move up, right? We're actually building quite a few long trades up here as well. Just like over the course of today, we've got 4 million, 12 million, 6.3 million, 1.1 million, 4.5 million. Is that all today? A little bit more back here, nothing really, 2.4 million. So, there's been quite a few long trades that have actually opened up today. And what's price doing? Well, we're just consolidating here. We're not really going anywhere. So, yeah, we are, building long trades here, okay? And we are building a reason for price to pull back, okay? Of course, we need to get the trade entry trigger, okay, to get into the trade. But if we do see all of that, okay, and of course we continue to see long trades on another move up, then there's a reason, right? There's a reason for price to move. I say this a lot, right? You always need to have a reason for price moving, okay? And when I say a reason for price moving, I do not mean there's a MACD cross or a bullish divergence on the RSI, or there's a buy signal on this buy and sell indicator. None of that nonsense, okay? That's not a reason for price to move, okay? First of all, these are all lagging indicators, okay? But second of all, like I said, it's not a reason, okay? Price doesn't have to move because the MACD crossed. It doesn't have to, okay? But what price has to do, okay, is price has to pull back if we start to see long covering. It has to. Why? Because that's how the market works, right? Exactly like with short covering, okay? Price has to rise when people are short covering. Why? Because that is what makes the markets move, okay? That is a reason for price to move, right? So I like to look for reasons for price to move. I don't like to look for these, like I said, these MACD crosses, these breakouts, whatever these nonsense are. Okay, yeah, I like to look for resistances, but I use different level, very different levels to most retail traders. Okay, the majority of retail traders. Okay, a very small percentage of retail traders use naked points of control. A very small percentage of retail traders look at key like high liquidity levels, okay? And I say a very small percentage because there is only a very small percentage of traders who actually trade in this style. You don't see these big influencers talking about order flow and all of this, right? And all these naked points of control and liquidity, really. All of these big influencers, right? They're looking at triangle patterns, head and shoulders patterns, breakouts of this, breakouts of that, breakdowns of that, breakdowns of this, right? All of the easy stuff. And I like to think of it. I'm a very I like to think of everything in quite a logical way, okay? And it's thinking about humans, okay? Thinking about humans logically. We're lazy, okay? We are lazy. We don't want. We want the easy route. We always want the easy route. Okay, I understand that, right? And that's kind of what we have to leverage, right? So we have to leverage that humans want the easy way out. Okay, and that's why a lot of humans, okay, do try and take that easy way, which of course is trading breakouts, trading, all of this all of this retail trading analysis, which is proven time and time again to not work. But it's easy, okay? It's simple, right? There's a lot of it out there. It's easy to access. It's easy to use. It's easy to learn. It's just easy, and that's how we're kind of wired, right? We like to take the easy way. We don't like the hard way. So this is why a very small percentage of the market trade like this. But then at the same time as well, people get filled with confidence in their trades when they're seeing big influencers thinking the same thing, or they see a large chunk of the market also talking about the same thing happening in price. Okay, so people find that quite comforting. Okay, when they know that they're doing the same as everybody else, right? When in reality, okay, that is only going to get them one thing, okay, and that is going to get them wrecked, right? They need to, if you really want to succeed in these markets, you need to move away from looking at anybody else. I do not let anybody influence any of my trades. And if I could say anything to you guys, it would be, do not let anybody influence your trades, right? It's okay, right? I share my analysis, okay? I talk about the trades that I take. I talk about the trades that I'm planning to take, okay? I'm just sharing with you what I know and what works for me. Okay, I feel like I've proven that time and time again here. So you can of course take the knowledge that I am sharing, okay, and of course put this into practice for yourselves. But again, like even for myself, I'd never let me influence a trade that you would want to take. Okay, you always need to have that belief in yourself that you are taking that trade for the right reasons. Okay. And if I'm not taking the trade, that's because that's my plan. Everybody has a different plan. Okay. My plan is to, at this moment in time, is to wait for $65,000 for a possible short trade. That is my plan. Okay. Your plan may be slightly different. Maybe you're not looking for $65,000 for a short trade. Maybe you're looking for $70,000 for a short trade, which at the same time, I'm looking for a short trade from 70K possibly as well. Okay. But first of all, I'm looking at 65,000 as a possible trade. Okay. So, getting back to it, right? Do not let anybody influence the trade that you're taking. Okay, I myself, I do not scroll through Twitter. I do not watch other people's YouTube videos, partly because they just have no meaning to me. Okay, it has no use to me, but also, I just don't want, to be influenced. I understand I won't get influenced. I'm way past that, but it's okay, right? Get yourself a strategy that works. I say a strategy. It's not really a strategy. I'm quite vocal on this. I don't think there's a solid strategy out there that gives you a set win rate. Okay, and certifies that you are going to be a profitable trader. I don't think it works like that. I wouldn't even say the trades that I take, it's really it's a strategy. It's not, because it's not, right? If anything, right, it is like loads of different strategies, okay, and it's like pulling one thing from there, pulling another from there, pulling another from there, and combining it all together to then create this scenario that you're kind of building in your head. It's not a set strategy. If anybody has a set strategy, I have to look for this, and this. If I don't see any of that, I'm not taking the trade. Then it's I don't really see that as useful. I don't really see that as I don't think you can consistently extract profits from the market when being like that. Okay, I think again, like myself, I pull things from different different angles. Okay, I build a reason. Okay, and again, going back to it, that there's got to be a reason. It always comes down to reasoning, right? Recently I haven't really been using VWAPs. Okay, but a few months ago I was using VWAPs all of the time. Why am I not using VWAPs now? Because they're just not as reliable as they were previously. So again, I kind of push that to the side at this moment in time. Naked points of control are kind of my go-to levels, right? Um, what else? What else we've got? Like daily levels, okay, not naked points of controls or anything, right? Daily levels, weekly levels, monthly levels. I haven't used them in quite a while either. Why? Because recently, okay, their strength, okay, has been a lot less than it was again a few months ago, right? So it's it's adapting to the markets, which is a very very important thing. And when you have a set strategy that you have to do this, you have to do that, you have to see that, you have to see that, it doesn't give you that flexibility because I don't think that. Well, this is. I guess this is. I can't prove it here myself, but I'm sure someone has out there. But I'm sure there is no strategy out there that has a consistent win rate. What I mean by that is consistently 80% profitable, or consistently 70% profitable, or consistently 90% profitable. There is no strategy out there. And I will hold my hands up and say, even myself, I'm not consistently at 90% or consistently at 80% or consistently at 70%. I can confidently say, I can't remember the last time I've dropped below like at least 60-65% consistently, okay, profitable trades, right? I can't remember. No, I must have been over a year and a half now, okay. Since I've had what I use here, okay, drop below that, right? But again, getting back to it, it's never ever consistently 70%. Sometimes I can have a win rate of consistently 90%, right, over a short period of time, right? But then it will change. Okay, it'll then go to 80, maybe 70, back up to 90, back down to 60 to 70, right? It's not consistent. Okay, it's not okay. Yes, you can still be consistently profitable, but you're never going to have a strategy that consistently gives you 90%, consistently gives you 80%. Okay, it's always going to vary. It's always going to vary. But what you do need to be consistent with, of course, is keeping it at least above, I'd say, 55%. The reason I say 55% is because you have to factor in fees as well. So if you do have a 50% win rate, you probably got a losing strategy because of fee. I always have to add in fees because fees can take a big chunk away as well, added up over time, right? So 50%, you have to have at least above 50% really if you count it in the fees. But yeah, again, it's like there's nothing out there that is consistent, right? I've got a strategy, it's consistently giving me 80% win rate. Okay, no, it's gonna vary. Of course, you can average it out, I guess, over a longer period of time. But you're never gonna have anything that's consistently 90, 80, or 70. It's gonna vary between those. Again, I hold my hands up and I say my win rate varies. It varies between 70 and 90. Okay. That's just how the game is, right? That's just how the game is. And, if you, again, think you're going to have a strategy that gives you a 90% win rate all of the time, it's not the reality of it, okay? Because these markets here, right, there's no rule book, okay, for these markets. There's no rule book. I say this a lot. You have to be able to adapt to these markets. And once you learn that, okay, once you learn that you have to adapt, right, that's when you start to adapt, right? Okay, because then you're understanding, right? You're thinking, you're looking at level. It's like you're subconsciously looking at levels as well, kind of without even realizing it. It's like, okay, right, a naked point of control, which I'm not interested in trading anyway, but how is price reacting at that naked point of control? If we're just smashing through that naked point of control, is this our naked points of control at this moment in time useful? Okay, have they got strength to them? Okay, if we're smashing through naked point of control after naked point of control, and they're of course like not naked points of control that I was interested in trading anyway, but if we're not respecting them, then it's like, should I really be trading that naked point of control that I'm actually interested in trading? Okay, it's all about just learning to adapt and seeing when certain things work and when certain things don't work. Okay, and this is perfect example here. 63,775. I'm not interested in trading this naked point of control, but we're consistently using it as resistance. Okay, we're really, really struggling to get above it. This puts strength in the conviction that naked points of control are a really, really, really good trade. Okay, a really good trade. Not this one, of course, or I'm not interested in trading this one. Okay, but I know that these naked points of control are respected, right, by price. Right, you can see it here as well. Okay, you can see it down here as well. Because these ones are older naked points of control. These are tapped, right? So this 52,874 is a tapped naked point of control. Tapped it perfectly. Huge move off of it. Okay, we've got a naked point of control here that's of course now tapped. Okay, and we're using it as resistance. Okay, so for me it's these naked points of control are really reliable at this moment in time. These ones, so this one here, this one here, and this one here, they're all untapped naked points of control. I should probably change the color of them, but I'm just, I know which ones are tapped and which ones aren't. I might actually just do that quickly, to be honest with you, just to make it easier for you guys to visualize, right? Let's just change the color to like white or something. It's a little bit annoying for me, actually. Where am I going? Color doesn't really matter, but there we go. So yeah, that's kind of it, really. That's kind of rant over. Of course, if you do have any questions, please do put them in the chat. I will answer any questions or take a look at anything you want me to look at. Stock market still just consolidating up here at all-time highs. And I'm just waiting patiently for $65,000, right? Again, you can argue there's a short trade from where we are now. Not really too interested in it. Again, this comes with experience. Once I understand many people watching this will probably have never used naked points of control before, has never looked at order flow, probably never looked at liquidity levels. Liquidity levels are a little bit more common now, but maybe there are people out there who still haven't looked at them. Okay, but looking at this, it's daunting. There's a lot to it. Especially looking at order flow, it's daunting. I understand, but once you get your head around it, once you understand it, okay, once you, again, like I said, once you understand that you need to adapt to the markets, you will then start to adapt to the markets, and that's when your trading life will become much easier, much more stress-free, because you kind of just get in tune with the market. And it's like, you hear people say that, right? That they're in tune with the market, and a lot of people are just saying that, but there is honestly a tune to the market that you can grasp. You can get in tune with that market, right? And it's exactly like, just for example, trading this here, we were shorting the highs, we were longing the lows, shorting the highs, longing the lows, shorting the highs, longing the lows, shorting the highs. Okay, and in that, I know it was quite a long time, quite a long period. So we entered into the first short trade here on the 8th of April. So I know it's a long period of time, but during that period of time, okay, on the swing trades, because of course I did take some day trades, which weren't based off of this, so I'm ignoring all of those, right? Just focusing on the swing trades, right? I was extremely in tune with the market, okay? I was shorting the highs, longing the lows, shorting the highs, longing the lows, shorting the highs, longing the lows. That is being in tune in the markets. You can see when price is looking very bearish at the high. You can see when price is looking very bullish at the low. You can see those things. I hear the saying all of the time. It's impossible to catch the high. It's impossible to catch the low. I disagree with that saying. I agree with it to an extent where you can't predict. Okay, you can't predict the high. You can't predict the low. But I can say confidently that you can catch the low. I was going to say guess the low, but I wouldn't. Yeah, there's probably the wrong terminology for it. But you can catch the high. You can catch the low. And I spoke about this in a live stream a few weeks ago, right? For example, okay, the all-time high. I took a short from all-time high. Did I know that that was going to be the all-time high for months and months and months and months and months to come? Absolutely not. I just saw a trade and I took the trade, and it happened to be all-time high. So yeah, okay, I can say I shorted the all-time high, but I'll hold my hands up and I will say I did not know that that was going to be all-time high. I saw a trade, I took the trade, it ended up being all-time high, and it's exactly like these pivot points here, right? So we had the short, we had the short trade from here. Did I know that that was going to be the lower high? No. Okay, I didn't. But I saw a trade. I took the trade. We got the pullback. Did I know this long trade here that I took was going to be, okay, the low, right? Did I know that we were going to not come down for another low? No, absolutely not. Okay, I just saw a trade and I took the trade and it ended up being the low. So my point is here that when people say you can't predict the low, you can't predict the high. Okay, right. You can't predict it, no, but you can catch it. Okay, you can catch it. So in a way, you can kind of predict it. Okay, if you want to put it like that. But yeah, like I said, it's not predicting it; it's catching it. Okay, you can catch the low, you can catch the high. Right, I've proven that many times on this channel to you guys. Catching the low, catching the high, especially trading, trading this big bearish structure here. Okay, all of the proof, okay, is in these live streams. All of the proof is on the Discord, of course. I've shown you many times that you can catch these highs, you can catch these lows. It is a possibility, right? Once you get in tune with the market, okay, you honestly can. You honestly can, because all it is reading what people are doing in the markets, okay, and then taking a look at, okay, when are these people going to get wrecked or about to get wrecked, right? You can kind of predict that, right? You can kind of predict when traders are about to get wrecked, or traders, when traders have been wrecked, okay, and they don't have anything left to enter into the market, okay. These sort of things you can predict, and that tends to catch the high, catch the low. Of course, not all of the time. Nothing is ever 100%, but the majority of the time, it does. Or a high percentage of the time it does. I just heard something go off in the Discord. Damien, good to see you, my friend. Godly short setup at 786 from all-time high to all-time low. All-time high, value area high, 1-to-1 fib retracement of the running flat naked point of control at 69,500. Such a strong setup. Let's have a look at this then. So from all-time high to all-time low. Right, so we've got the 786 here. Of course, we're looking at this. Of course, I say this a lot. I don't like to look at diagonal levels, but they can help us. They can really help us. It's kind of just, I wouldn't use it as a trade entry trigger, but I would use it as just an understanding. Okay, what is price doing over an extensive period of time? So yeah, what was the price again? 69,500. Yeah, I love the setup from 69,500. And then 68,539, it could be entry, especially when the breakout traders come at that level. Lots of confluence. Yeah, I do love the confluence here. So yeah, it's kind of, it's nice to see that your analysis is lining up with mine, Damien. So yeah, it's literally, what I've been saying, right? Where, $65,000. Okay, we've got high liquidity level. Possible breakout traders are going to be getting very, very bullish here. They're going to be looking to long. We're then coming into resistance with, of course, naked points of control at 66,325, 67,300. Okay, that's what I'm kind of looking at. Then And then you are looking at a GP786. So all-time high to the recent all-time low. So yeah, of course we can use that as resistance, of course. 786 is coming in at 68,600. So yeah, for me, this is how I would determine which one to trade, because there are two levels, right? There's between like 65 and 67,000 that we can look for a short trade up here, and then of course there is let's say I'd say $70,100 to 71,300, maybe even a tad higher. Because how I see this is, okay, right, we're coming into resistance here. If we get the pullback, we get the short trade set up here. I like that for the pullback, okay? And I wouldn't be looking for higher prices here. I'd be looking for the pullback, for then price to come back up, right? And then this would be like a future short trade. And it would be, okay, if we're gonna come up to $70,000, it's okay, right? I'd like to take out the high from there. I'd like to take out that high. Of course, that comes in confluence with the resistance at 70,860. So I'd like to see the short trade from there. That's kind of how I would like to see it play out, to be honest with you. So of course, if we get the short trade from 65, I will take this short. And when I say 65, I mean 65 to 67. So yeah, if I see the short trade there, I will take that. If I do not see it, if we smash through the resistance, start to use that support, okay, we can look for like $70,000. I'd have to be honest, to take the trade, I'd have to look for above 70K because I want to see this high being taken out. So yeah, I'd be looking for the high to be taken out, coming into resistance, and then that's where I'd look for a possible pullback for for a bigger pullback for that short trade, of course. So that's kind of how I'd look at it. But it's good to see that the analysis, of course, is lining up. I'm not focusing too much on that naked point of control just because I don't see absorption where we are at this moment in time, but it doesn't mean that it isn't resistance. It is. I understand that it is. We can use it as resistance, right? But yeah, it's good. It's looking good. I like the confluence at either levels, and I can see even Damien here has got more levels than I do, so more confluence at the levels to add on top of mine as well. So it's nice. Yeah, exactly like he says here, right? We've got lots and lots and lots of confluence, right? It's nice to see that confluence. Now it is okay. What are traders doing at these levels? That's literally it, right? What are traders doing at these levels? Are we seeing those FOMO longs come in? Are we then seeing them get trapped? What level is that happening at? If it's happening at 65 to 67, we're looking for that short trade there. Okay, of course, waiting for that trade entry trigger. If it doesn't happen there and the longs continue to come in and price just continues to rise, then we look for that at $70,000 roughly. Okay, we know that a big pullback is going to come. Okay, again, I never long moves up. I never short moves down. Okay, I always short moves up and I always long moves down. Okay, so I know at some point there is going to be a pullback. Where is it going to be from? 65, 70? I don't know. I don't care. I'm just going to wait. I'm going to look in the order flow. Okay, see what the traders are doing. See when they could be trapped. Okay, and once I start seeing that align, and of course we're lining, and that's lining up with the confluence that we have. Okay, the resistance that we have. Okay, that's when I then look for that trade entry trigger, because what can happen is we could actually smash through all of the resistance, and then we could kind of look a bit bearish in this kind of like no man's land, if we'd like to call it, where there's no levels. Okay, and then we possibly form some trap traders up there. That gives us a bit of a difficult like a difficult scenario there, because there's no resistance there. There's no confluence there. Okay. Doesn't happen a lot. Does happen every now and then where you just literally pull back from a random level. And that's when you can kind of see it and preempt it in the order flow. Would I take the trade? Not really. I like to, again, look for like 3 bits of confluence. Order flow is only 1 bit of confluence. So I wouldn't take trades solely off of order flow. But yeah, we could, in no man's land, form, get trap traders and price pools back. When I say we need to see everything aligning, I want to see those trapped traders coming into resistance. Why? Because statistically, over time, trap traders coming into resistance leads to those trap traders getting wrecked. Okay, which of course is what we look to take advantage of. Posted a running flat at 68. Look, awesome. So I think that's just what we looked at. And especially that broadening structure right at where breakout traders love to long that level, you can smell them coming lows will follow. Exactly. Yeah. And especially with the what's going on within like Twitter and YouTube. Everybody's pretty bullish now. So yeah, this is why I'm quite confident on a short trade. It's again, I spoke about this quite deeply in another live stream, so I won't go into real detail with it. But it's like these moves up, all of them, we saw incredible amounts of long trades open up. And all of them then got wrecked on the pullback, right? No short trades opened on the pullback. It was just long trades getting wrecked. And, this shows us, okay, that the market is, and everybody is extremely bullish at this moment in time, okay? But it also, right, what it tells us is that price isn't really ready to be that bullish at this moment in time. And if this continues, in my opinion, it could get very messy, as in we see a big correction, because, longing every move up and getting wrecked on every move down, that is not sustainable price action whatsoever. Okay, it's not sustainable price action whatsoever. So if it were to continue and we can't change that structure quickly, okay, to bullish structure, and we can't see the charts looking bullish, then again, it can get messy quite quickly, okay? Because again, everybody is thinking the same thing and everybody is getting wrecked, okay? And at some point, it's all going to come crashing down. Everybody's going to make one big same mistake, and the market is just going to get absolutely obliterated. Okay, and it's we've seen it before. Okay, we have seen it before. I can't really show you an example because again, the order flow is again, Exo charts only shows you so far back because it shows you so much information in such a small area. But yeah, it's happened before. Okay, and it will happen again. Could it happen here? Possibly. Is it definite? No. Okay, we can we can see the chart shift a little bit more bullish. At this moment in time, I still think that the market is bearish on the larger time frame. Okay, but again, it's that slow build that we need. Okay, we need to start to see that bearish structure being flipped, okay, to more higher time frame bullish structure, which at this moment in time we're starting to do. We're not there yet, but we're very close to possibly doing that. Once we can do that, okay, we then want to see, of course, that bullish structure continue, and we then want to break the bearish structure. Once we break that bearish structure, okay, we can be looking for higher prices. But again, like Damien said, right, we need to kind of remain cautious, right? For we need to smell those long trades that will be FOMO longing, right? We need to be cautious of that because we don't want to be caught offside, right? Not that we would anyway, okay? But there is a possibility that if we don't prepare ourselves, we can be caught offside. if we're not looking at the order flow, if we're not looking at what's about to happen, okay, we can get caught offside. So we do need to keep up with the order flow, keep up with what is going on, okay, within the charts, and what the majority of the markets are doing. Because if we're not doing that, right, then we are again going to be on the wrong side of the market. Okay, and we do not want to be on the wrong side of the market, like all of the other retail traders. Okay, we want to be on the right side of the market, and by doing that, okay, we need to understand what all of the retail traders are doing, what all of the sheep are doing, and then look to do the opposite. Okay, that is pretty much the summary of the strategies that I look for, the trades that I look for. Right, it's looking for what the retail traders are not doing, the opposite of what retail traders are doing. So I think I will leave that there, to be honest with you. Been live for about 45 minutes. Again, it's nothing too technical today. It's more just talking about important stuff that you need to be aware of in these markets, right? Because again, I don't want to repeat myself each day, right? Because we're not really doing anything up here. I'm not taking a trade here. So I thought I'd talk about important things that you need to know if you want to be successful in these markets, right? So I will leave that there. Stock market again is up there, right? If it continues to pump, we see Bitcoin follow it. So that is pretty much it. So I hope you enjoyed. I hope you got some value from this. I know it's not extremely technical today, but once we finally get price to where we want to see it for that possible trade, okay, that's when it can get more technical, and that's when it gets more exciting, right? Of course, like I say a lot, trading is a large portion of trading is patience, and it can get boring at times. That's why I like to keep myself busy during the day, because most of the time I am waiting around. Trading is just a waiting game, right? You're waiting for the setup, you're then waiting for the trade entry trigger, and then you're waiting for the trade to play out. It's just waiting. Again, there's only a very small window. There's a very small amount of time where you're actually doing something, and it can probably drive you crazy if you don't keep yourself busy. So it's always good to keep yourself busy. But that's what this game is about, right? It gives you that freedom to do what you want, really, whenever you want, to an extent, right? Because of course you are still required to be at the charts as and when you are needed, right? But like I said, it does give you the freedom. It's given me the freedom to not have to go to work, not have to get up at a stupid time to then drive to work, to then sit in an office that I don't want to be in. It's very rewarding. Okay, but you got to put the work in, and it's tough. But I believe that everybody can get there if they put themselves in the right mindset. It's like, like I said previously, right? It's putting yourself in an uncomfortable position. You need to put yourself in an uncomfortable position, because these markets are very uncomfortable to be in. If you do not like being uncomfortable, then these markets are not for you. So you need to find a way to learn how to thrive in uncomfortable positions and turn an uncomfortable position into a comfortable position, right? Like I said, it's very uncomfortable to enter into a trade, okay? Sometimes, till this day, right, I'm thinking, this is a lot of money that I'm putting online. Okay, do I let it affect me? No. Okay, but everybody's been through this where they are very uncomfortable to press that button to get in that trade. Okay, and a lot of the time, maybe they do not press the button. Okay, and it doesn't, play in their favor, because they miss the trade. Okay, but putting yourself in an uncomfortable position and being able to put yourself in an uncomfortable position, okay, of course, is remember, risk management is still the most important thing. But even with risk management, you're still putting yourself in an uncomfortable position. It still feels like you're putting yourself in an uncomfortable position. So you need to be able to thrive. And people who naturally thrive in uncomfortable positions, this is the perfect job for them. I can openly say that I myself did not thrive in uncomfortable positions, but I taught myself to. How did I teach myself to do that? Well, trading was one of them, amongst other things that I like to do as well. Okay, it's trying to build that mental strength up. Okay, it's hard. Okay, it's not all about the technicals. Okay, it's mentality as well. Mentality is a big part of this. Um, so yeah, a very important thing to think about as well. So yeah, I will leave that there. I hope you guys enjoyed. I hope you guys got some value off of this. Yeah, a bit more of the psychology side of things today, but yeah, it's all very important. Trust me, it is all very important things. So yeah, have a lovely rest of your day. If you haven't already, please do smash that thumbs up button, and of course, I will see any Visionary members in the Visionary Discord. If you want access to that, first link in the description. If not, then I will see you tomorrow for that.